in trading, there's no secret indicator that's going to tell you when to buy and sell anything. If that was the case, why would anyone tell you about their secret indicator instead of keeping it for themselves? The reality is all indicators are lagging, and you don't need a single indicator to become a successful and profitable trader. Once you realize this, you're going to focus all your attention on price action. So in today's video, I'm going to show you one strategy you can use to make a living day trading. So what is this price action strategy and how can we use it to make money in the markets? So this strategy is based off of previous day highs and lows. This means that we're going to be looking to target these levels. The reason being is because there's a lot of liquidity resting above and below those levels. So if you've been trading for a while, you understand that these are key levels to mark out when you're trading intraday. These levels can be used as potential targets, potential pivot points, continuation levels. What I'm trying to say is that these are very key levels that most traders have marked out on their charts. So in this case, we're going to be using this to our advantage and looking to target these levels as liquidity. So how do we trade this strategy? Step one, we want to mark out the previous day highs and lows, right? These levels will be used as our targets and liquidity levels, right? There's a lot of liquidity resting above and below these levels. So we'll be using these areas as targets. So step two, we want to mark out key pivot levels such as pre-market high and the London session high if you're trading futures, right? We want to be marking out key highs and lows, or you can potentially use these as entry points to target the previous day highs and lows. Step three, we want to enter in on a retest of a key pivot level, an order block, a fair value gap. What we want to do is wait for confirmation that price wants to head towards the previous day highs or previous day lows. Step four, once we have our entries, what we want to do is set our targets to being previous day highs or previous day lows, and we want to set our stops at a break of structure point. This is the 4-step process on how we're going to execute this strategy. And before we want to execute this strategy, there's just some things to look out for before we want to execute this strategy, right? Some checklists that I have is that I always like to have unmitigated liquidity, right? What does this mean? This means that price has not taken out a previous day high or previous day low beforehand in the pre-market, right? So I like to see unmitigated liquidity. That means price has not been towards those levels and we have not mitigated the price. So these are unmitigated liquidities, high probability areas that most likely price is going to head towards if it's unmitigated. And other things I like to look for is a high risk to reward ratio. I want at least a 1 to 2 risk reward ratio. That means for every single dollar we risk, I want to at least have a $2 reward. And now we're going to be going on to some live examples that I have for us today. As you can see right here, we're on our first example right here on SPY. We're going to be marking out the previous day high and we're going to be marking out the previous day low. And now after this, we want to go on to the lower time frames. So right here, we're now on the 5-minute chart. You can see right into the morning, we end up marking out our previous day high, but we already went above our previous day high in the pre-market. So what does this indicate to me? That we've already mitigated the liquidity, right? We already got above the previous day high. So now we're not going to be looking to target previous day high because we've already taken out the liquidity of these levels. But what hasn't been mitigated is these previous day lows. So we're going to potentially be looking for a reversal trade back down towards previous day low because the levels have not been mitigated, right? There's still resting orders below these levels where there's sell stops, where there's buy orders. There's going to be a lot of liquidity resting below previous day low. So we're going to be looking to potentially target this area. So now we'll head on to the lower time frames and wait for price action to develop. So right here, we are now at market open and we'll wait to see how price action develops coming into the morning. So right here, you can see that we tried closing back inside yesterday's range, but we quickly got above yesterday's range. So we understand that if we want to close back inside yesterday's range, this is an indication that we could potentially head lower back towards the previous day low. So what we want to do is mark out this key pivot low right here. And now we'll wait for price action to develop. So what I want to see with price now is I want price to act weak, potentially come back and retest level towards previous day low levels, right? That would be the best opportunity to short, right? Right here, we want to wait for confirmation. So the confirmation will be a break below low of day, a potential retest of low day, and then continuation towards the downside. As we play the tape here, you can see now we're starting to close back inside yesterday's range. What I want to see is now more confirmation. So what I like to see is a break low of day and potentially retest this level for more downside. And you can see we finally broke low of day and now we are having a retest of our current low right here. So this is where we can look to take entries because it's giving us the confirmation that it wants to head lower. So we can short right here. Your stops can be at high of day, right? This is a protective stop. And we can have our profit targets all the way down at low of day, right? This will be a 2-to-1 risk to reward ratio. If you want, we can mark out our pre-market lows. This can be your first profit target, and your final profit target can be previous low of day. Either one works. If you like to take partials, right, this will be a level, or you can hold for that full profit target. And now we'll play the tape here. And you can see right there, that's where you want to scale your first positions. And now we'll leave trailers, right, for that low of day, that previous low of day level. And you can see right there, we finally hit it. Our low of day, we will be all out right there. And you can see exactly where price ends up reversing right at low of day. The reason being is because these are key levels, as I mentioned. You can see we came up into the market, flirted around previous high of day and the top of the range, and now we gravitated towards the bottom of the range, which is the previous low of day, which is where the liquidity is resting, right? So you always want to have these levels marked out because they're key inflection points where there's a lot of liquidity, and the market is going to have a lot of transactions around that marketplace because there's a lot of liquidity around those areas. So now we are going to be heading onto our second example that I have for us today. So right now we are on my second example of the day, and right here we are on Tesla. So as always, we're going to be marking out the previous day highs, and we're going to be marking out the previous day lows, right? These are going to be the liquidity levels that we're going to be looking to target. As in this case, right, we have a strong push towards the downside on the daily chart. So what we're going to be expecting, we're going to be expecting lower prices because we are in a downtrend. So now we'll head on to the lower time frames where we're going to be looking to execute. So right here, we are on the 5-minute chart on Tesla, right? We marked out our previous day highs, and now we marked out the previous day lows. And what else we're going to do is be marking out key levels in the pre-market. Right here, you can see that this is a very key level. We have multiple touches in the pre-market. We can also mark out this gap level that it has, right? From yesterday's after hours to the pre-market, right? We formed this gap level. You can see right here, we also touch it with this imbalance right here. So this is going to be the level to look out for, right? So now we'll head on to the 1-minute time frame and wait for price action to develop. So right here, we're at market open. We'll wait for the price action to play out, right? So as you can see right here, we have a strong push towards the downside. The first candle, right? The first candle came down perfectly, touched our key level that we had, closed right back onto the open, but the next subsequent candle closed below this level, right? So this is going to be a very key level to look out for, the 234.3 level. That is a very key level to look out for towards the downside if we could potentially get a retest of this level for moves down towards previous day low. So right here, as you can see, we have a clear level here being this 234.3 level, and that's where we're going to be looking to take shorts, right? We're going to be looking to take shorts in this area with targets being our previous day low, with stops being just a break above market structure, right? That's going to be the levels to look out for. As you can see, we tap into this level one more time, right? Clear level that we have, clear stops, clear targets, and we have a clear trade that we have. So now we want to wait for the trade to play out. And as you can see, we finally hit the target perfectly right at the previous day low, and that is where you want to scale your positions, right? So in this case, right, we had a very clear push towards the downside right on the second candle. We came back up towards the retest, this opening candle print. We have a lot of confluences here. You can see that we have a touch right here. We also have this gap level, right, which is that very key gap level, this imbalance. So this is a very key level to look out. 234.3 level, that is a very key level. So that's why once we got below, we look for that retest and we look for continuation towards that next level. And that next level is our previous day low. So that's exactly where we're going to be looking to target every single time. With that being said, we're going to head on to our third example that I have for us today. So right here, we are on my third example of the day. And of course, we're going to be marking out key liquidity levels, previous day highs, previous day lows. Now we're going to be heading on to the higher time frames as always. So what do we have on the 1 hour chart, right? So what do we have is an inside bar day. As you can see on this day, yesterday's range, we never ended up taking out liquidity towards the upside or the downside, right? So this is built up liquidity, right? An inside bar means we haven't taken out the previous day highs or previous day lows. So there's a lot of built up liquidity. This means we're looking to expand to either towards the upside or the downside. You can expect a rapid move towards those levels because yesterday's range, right? We're stuck in yesterday's range where there's no liquidity, right? There's a lot of orders being willing to place above and below those levels. So we can use the exact same strategy, but on a higher time frame. So in this case, right, what we want to see is this can act as a key pivot level, which is the previous day high. We can look for a break above the previous day high level, a potential retest of the previous day high, and then we're going to be looking to target this key pivot level, which is yesterday's previous day high, right? Where there's a lot of liquidity built up because it's unmitigated, right? So that's what we're going to be looking at coming into this day. So now we'll head on to the lower time frames. So right here, we're coming into market open. We understand that there's a lot of liquidity resting above, right? We have a potential opening drive play towards the upside because now we're resting right above previous day high. So we can be looking for that opening drive right off the bat, right? So in this case, you can see the opening candle break came down, retested the previous day high level. So we're most likely going to expand higher. So right here, you can see the opening candle print. We retested previous day high. We closed above with strong confirmation. That's where we can look to take entries. With stops to break below, your first profit target can be the previous day high from yesterday, right? And you can also target a 2-to-1, right? This is what I like to do. So your first profit target can be here, and your second profit target can be a 2-to-1 risk reward ratio. Let's play it out here. And you can see price quickly just expands towards the upside because of the higher time frame liquidity, the inside bar day. If you look on the daily time frame, it's very bullish on NVIDIA. So this is what makes it a very high probability trade towards the upside, right? The strategies work, but what you have to understand is the daily bias. You have to understand the thesis behind the trade and why it works, right? That is the most important factor when it comes to trading, right? No strategy is ever going to be 100% win rate, but if you can build the thesis around your trades, right, that will give you a higher win rate, and that'll give you the conviction to hold for these higher time frame moves. And now we're going to be going on to our final example that I have for us today. The final example that I have for us today is on NVIDIA once again. So what we're going to be doing is marking out previous day highs and previous day lows. And now we're going to be going on to the lower time frames. So as you can see in this example, right, we have a clear high in previous day lows, right? And what you want to mark out now is key levels, right? In the pre-market, you see this is a very key pre-market level. So what we're going to be looking for is a potential move towards the upside, a retest of this key level, and then a move towards previous day high. So now we'll go and play the tape. So as you can see right here, we have a very clear retest right here. And that's where we're going to be looking to take our entries. So you can take our entries with just a stop, just a break below, right? And your targets will be that previous day high level, right? This is going to be a very nice setup. And you can see in this example, you will end up getting stopped out, right? The trade doesn't always pan out, right? What you have to understand is that no strategy is going to be 100% win rate. As you can see in this case, right, the setup was there. We had very clear targets above. The higher time frame was bullish. We had a very clear pre-market level. We had a very nice strong confirmation right here, the retest of pre-market high. And this trade just didn't end up working out, right? And you have to accept that fact. Not every single strategy and not every single trade is going to be a winner. What you have to understand is that you have to keep your losers small and you have to manage risk properly because not every single trade is going to be a winner. And as you can see in this case, right, we have kept our losses small. It was a 2-to-1 risk reward ratio, so it fit inside our system, right? We have to understand that losses are a part of the game and they are going to happen. And with that being said, I hope you guys enjoyed that video. If you did, make sure to like and subscribe, and I'll see you guys next week. Peace.